Hi again. Here it is, the beginning of 2026. And I want to talk about the current state of our economy and the amount of debt that we have. Did you know that every major market downturn in history has been caused by too much debt? Too much debt in 1929 in the stock market, in 1987 it was in junk bonds, in 2000 it was in technology companies that had no earnings, no products, and in 2008 it was overinflated, and overpriced and overmortgaged homes. Debt is a very big concern. And I'd like to talk about the level of debt we have in our economy. Think about it as your debt. Think about the amount of debt that you hold currently and whether it's too much or too little. I've been in places in my life where there was too much debt. I had too much debt. And I knew it, and I knew I had to bring it down to become more financially healthy. Why? Because people won't owe you money. You will have a hard time paying your bills in the future. If interest rates go up, you're going to be in trouble. There are so many risks to having too much debt. And at this point in our economy, we have a lot of debt. Don't talk about it much. They tell you the debt's going up, but they don't tell you really how much it is. Well, how much is the debt right now? It's about 35 trillion dollars. Now, keep in mind that in 2017, our national debt, the amount of money that we owed, was 17 trillion. So we have doubled our debt in the last 8 years. Doubled from 2017 to 2025. We've added about $18 trillion worth of debt. That is why we have inflation. Inflation is caused by too much money chasing too few goods. If you add a ton of money to the economy and you don't produce that much good in new goods and services, then the money will be too much and will cause the prices to go up. Now, this takes time. It takes time. You don't inflate an economy overnight. You don't inflate prices overnight. It takes a period of time to do this. So we have way too much money in the economy for a long period of time where we weren't producing enough to buy all this new stuff with double the amount of money we have. Now, I don't know if that makes sense, but think about it for a little while. Too much money chasing too few goods is why we have inflation. Now, if we had $18 trillion going into our economy, that means we have 330 million people here, and we added 18 trillion to our economy, so that means about $54,000 for each man, woman, and child has been added in debt to our economy. Every man, woman, and child. $54,545 per person added to our debt and to our economy. Now, that means you should feel $54,000 richer since 2017. The question is, do you? Most people would say no. The question is, where did the money go? Where did the money go? And you've heard that a lot. It's flown to the top. The top 2% are far wealthier. The middle class is not. And we talk about that in some other video. So we have added a great deal of money to our economy. We've added a great deal of debt to our economy. Prices will go up to meet the amount of money that we have in our economy. We have to stop adding debt to our economy. In fact, we need to reduce it. The main problem with debt is We have too much of it. We get our money when we need to borrow from other countries. We get Japan loans us tons of money. China loans us money. Great Britain loans us money. Anybody who buys a U.S. Treasury is loaning us money. Now, the more money we owe, the more interest we have to pay people we want to borrow from. So our borrowing costs are going to go up and are going up with the quality of debt we have. We're not earning a lot more money. We're taking on more and more debt. We've taken on a lot more debt than we have increased our production. So it's very important that we take a look at that. Take a look at the amount of debt in our economy and also the amount of debt that all of these companies have. It's a real danger out there right now, and it's something that we really need to look at. Next, we'll deal with AI and what that really means in our economy. Thanks for listening.